Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in. Good afternoon. Joe Kuchera with Real Estate Radio Live. Thank you so much for spending some time with us this afternoon. Just a couple minutes before I invite my guests in, just a reminder where you could listen to the show, follow the show. Remember, we're with you 5 days a week. We're the only live real estate-related show on the air 5 days a week, Monday through Friday from 3 to 4 Pacific Daylight Time. So you can tune in at KDOW 1220 AM on your radio. Also, if you're not near the radio, you could go online, and if you go to kdow.biz, that is the radio website, you can listen to us live online during this time of the day. Also, we have Facebook streaming live, so thank you for those folks that are following us on Facebook. We appreciate that. And lastly, be sure to download the podcast. With everybody's busy schedules, that is really the way to go. Be sure, no matter what, to download the podcast. You could go to iTunes and just type in Real Estate Radio Live. You get it that way. Or you go to our website, RE Radio Live, or anywhere on Google. Just type in Real Estate Radio Live. You could download the podcast and follow the show anytime at your convenience. We're a live show, so during the show, if you have any questions for me or my guests, I'm going to introduce in just a minute. 1-800-516-1220. That's 1-800-516-1220 if you have any questions for us. Most of you know the focus of the show since I've started almost 8 years ago is education and information. So I'm a big believer, and I know the consumers have enjoyed it over the years, and really help educating consumers on anything and everything real estate, how to navigate real estate. Well, part of that is investing strategies, tax planning, a number of different things. So let me invite my guests in today, Mr. Evor Vattuone, is that right? He's the president, and also have with us Mira. She is the Vice President Chief Compliance Officer for both with Aspire Planning and Associates. Welcome, you guys. Good to have you here.
Thanks for having us.
You too. Yeah, so let's do this first, you guys. If I could get each of you to maybe give the listeners an idea of your background and then your current roles and responsibilities with your firm today, that'd be great.
Sure. So I started in the business about 22 years ago in a firm in New York. Graduated back over here, wanted to come and serve clients over here. I spent some time as an HR director for a software company, so I kind of have the corporate understanding as well. But my passion in my business has always primarily been surrounding financial planning, investment management, taxation, things like that.
Very good. Welcome.
Thank you.
Hi, and my name is Mira, and I got my start back in 1999 with at an independent broker-dealer in San Francisco. Started out in compliance, which is no surprise, I'm the chief compliance officer of this firm, but and then slowly made my way over to the client-facing side and became a CFP, and so I've been doing it ever since.
Very good, very good. Well, we'll touch on a couple of things today, but maybe to start with, I know that all the details aren't out. We were talking a little bit before the show, the new tax bill, the new changes potentially, but maybe the best way to start, you guys, if you could kind of take the listeners through the importance of planning, when it relates to real estate. I mean, you guys, hundreds and hundreds of clients you work with on a regular basis. I'm guessing, what is the percentage? I'm guessing most of them own real estate, right? I mean, I'm guessing.
Almost all of them.
Almost exactly. All of them. Yeah. So tell us a little bit about how that planning process works. I know you guys sit down holistically and you go through everything as a financial planner, but kind of take us through, if you will, for the listeners, how that works in your practice when it comes to real estate and planning, both short-term, long-term. When am I going to sell? When should I buy? Kind of give us an overview of that, if you would.
Sure. Do you want to take that?
No, you go ahead.
Okay. So it starts with an understanding of what their goal is, why they want to own real estate. Are they prepared, both from a budgeting and a cash flow perspective, just the dollars and cents. And then why is it, where do they want to live? What kind of schools? Forward-thinking, many years down the road, are they going to have children? So on and so forth. Because what we don't want our clients to do is really jump into a situation not understanding what it means whether it's from a cash flow risk point of view. That is, what if one of you, if you're both working now, what if one of you becomes disabled or gets laid off? Can you still afford the house?
Right.
So that's more of the qualitative or the quantitative aspect to it, the dollars and cents. The other side is the qualitative, the whys, what motivates you. We want to kind of understand that so that they can make the right decision on where to be, how much, what the house is going to look like, and it helps us help them make a better decision.
Right. I mean, one of the things I think, I would guess, is that one of the important factors of having a financial planner or someone like yourself, you guys that manage their money but also look at this on a regular basis, is that it helps them stay accountable, right? I mean, a lot of people, even with help like you guys and your expertise, I don't know what the number is, it's staggering still how many people are, not prepared for retirement and have saved less than $10,000. The numbers are staggering.
It really
aren't
is.
they?
It's an unfortunate number as well. I remember reading a statistic saying around 60 to 75% of all single females who are in retirement that are single have Social Security as their sole source of income. Yeah. So we want to really try and avoid some of the common pitfalls and major mistakes that people make along their life path. From the time that they're accumulating assets and working to the time they're in retirement, and that involves real estate. Right. It always involves a house. It's a big asset. What do you do with it? You can make big mistakes with the money. So, we want to make sure that they understand what they're doing. And when it comes to the taxation, the cash flow, we want to make sure everything's kind of seen from a bird's eye view. We're not making any mistakes.
What's interesting to me now, and, as we look back, I don't know, 15, 20, 30 years ago, how many people would have thought of their primary residence or some real estate as a form of the retirement or wealth building.
Right.
I think, years ago it was, you buy a home to raise your family, live in it, and that's what that was for. And now it's so much more. So how does that, I'm guessing that just becomes a bigger part of strategical planning with you guys, right? Now you have these multi-million-dollar assets along with retirement funds, assets, capital. So that, I'm guessing, is a little bit more of a challenge the way you manage people's money right now?
Yeah, I always tell prospective clients, our role really is to help them make decisions today so that they don't pigeonhole themselves in the future. And so when we look at clients, if they're millennial clients just getting started and they want to get into real estate, we'll look at best ways to position them, strategies to get them into real estate. And like you said, real estate nowadays can be used in a lot of creative ways to, help grow assets, grow net worth, and also position them for a stronger retirement.
Right.
Yeah.
Yeah, absolutely. A couple times during the show, I want to make sure to our audience, both if they're listening live and, of course, later on, you guys, this is on podcast. So if someone's listening to the show either live or on podcast or Facebook, if they want to reach out, they have some questions for you guys or your firm, what's the best place to reach you?
You can find us online at www.aspire-planning.com. We're also located throughout the Bay Area in Cupertino, San Mateo, and Walnut Creek. And you can call us at 925-938-2023.
Great.
And speak to any one of us.
Very good. Before we move on, the last thing on the planning side, isn't it difficult to? I think maybe it's difficult for most people. Just the planning process. Some people are really good at it, right? If you have that built-in kind of it's your DNA, right? You're good at it.
Right.
But then there's a lot of people that aren't. Right. Because they just live for the day and, 20 years from now, don't worry about things, they'll just take care of themselves.
Sure.
But that's where your job comes in to really get them focused, right?
Right.
And so is that just is it a human behavior thing that most people, it's difficult? Even you could have the best graphs and information that shows them what happens 10, 15, 20, 30 years down the road. But it is still hard for people in general to actually maybe look at what my life is going to be 30 years from now. You think that's psychologically that's a challenge?
Oh, absolutely.
Yeah.
Absolutely. Yeah. The psychology goes, I think, a lot farther in that you have to understand as a financial advisor really what's going to motivate people to take action and to implement a certain recommendation.
Right.
Because as you probably know, you can explain something logically to someone until you're blue in the face, and then they do the exact opposite once they walk out of your office. So one of the things we do with the financial life planning side of our practice is we get to understand the kind of the psychology behind why you want to do something. Once we understand why you want to do something, then we can approach the problem or offer a solution that might better fit what the client really wants. And so there are a number of scenarios where, the psychology really does come into play big time.
So customize each person's a different customized profile.
Right.
So if someone says, I really want to retire at 62, and they're not doing what they're supposed to be doing, it's your job to say, well, wait a minute now.
Right.
Do you still want to retire at 62? Because if you do, you better be doing this, this, and this.
Right. Or how serious are you about not working? You can not work maybe down in Mexico.
Right.
Just retire whenever you want. But sure.
All right. What we're going to do is take a quick break. We're going to come back. We're going to continue our conversation on investing as it relates to real estate, taxes, and much more. If you have any questions, 1-800-516-1220. Again, 1-800-516-1220. This is Joe Kuchera. You can also text the questions in while we're doing the show at 408-838-9060. We'll be back with you for the live portion of the show in just a couple of minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
The world is changing, and so is real estate. It's changing in ways that give consumers more control with more affordable options. So what are your options? Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air educating and informing consumers for over 7 years now. I'm excited to announce that there is now a more efficient and cost-effective way to buy and sell real estate. Our team at Real Estate Radio Live is launching a new program designed to help buyers or sellers like you in real estate, lending and title. That's right, we'll coordinate the entire transaction for you. So you benefit by working with the same team, saving time and saving money. We'll guarantee you'll not only be working with the most qualified, hand-picked experts in real estate, lending, and title, but you will also save a significant amount of money in all three services as well. Act now and benefit from changing the world of real estate. Call 408-838-9060. Go to RERadiolive.com. That's RERadiolive.com.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDLW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining us this afternoon. Joe Kuchera with Real Estate Radio Live. We're with you 5 days a week. Today we have a couple of guests in studio. Evor and Mira are both with Aspire Planning, and we're talking about planning in general, a little bit about taxes. We're going to talk about the market. We're going to kind of spread it around and cover a lot of things here. So if you have any questions, 1-800-516-1220 for the experts that are in the studio today. And I believe we do have a caller that is calling from San Jose. Abe, are you there?
Hello?
Abe?
Can you hear me?
How are you?
Yeah, this is Dave.
Yeah.
I'm doing great. I've got a question.
Sure.
I live in San Jose, and I'm 50 years old, make $150 a year. I have a house that I own. I'm paying a mortgage on it, and I live in it. Mm-hmm. And then I have another house that I'm renting and paying a mortgage on, of course, right? Now, with the new laws about LLCs and taking 20% of the money you get right off the top and not being taxed on it, I want to know if I should make that rental, if I should create an LLC just for that rental.
Well, so I'll say first, and I'll pass it on to these for their opinion. None of us are CPAs, so if it's any tax advice, you have to, I would always say, check with your, can you hear me?
Yes, I can.
Okay. I would say if you have a CPA, check with your CPA, because as these tax laws change, you really need to be careful that from a tax perspective, what you're doing. But I'll pass it on to you guys. Do you have any thoughts on his question in regards to that? What to do with that?
Well, I'm not quite sure I understand the question. He wants to know if he should turn the rental property into an LLC.
I believe so. Was that your question, Dave? If you should maybe
exactly
convert it to an LLC? Yeah.
Okay.
Yes.
I can't speak for the tax consequences of it, but typically people who have rental properties go down the route of putting them in an LLC for liability purposes. Another strategy we use sometimes too, because creating an LLC creates kind of an annual requirement to file and update to keep that current, is increasing your umbrella insurance policy from a liability standpoint. But I'm not quite sure if that answers your question.
Yeah, you know, the other thing...
Well, I was going to say that's important, too. The liability, definitely a plus on the LLC side. And I do know from looking into it myself, I think it'd be in California, maybe $800 a year I'd have to pay to keep it going or whatever. But I just thought for like liability's sake and for so on and so forth, it might be a good idea. But and then also I need to make sure that I can transfer it from my name to an LLC without having to refinance.
Well, yeah, I could tell you on the finance side. So one of the things you have to be careful with, there are not a whole lot of lenders that love financing in LLCs for obvious reasons. Now, there's some that do, private banks or commercial, some banks you have personal relationships with, they'll do it. They're out there. But I would just tell you that the generic basic lenders aren't big fans of financing in LLCs.
That's a good point. So they want personal liability. I have to refinance. So you're saying
that's true.
To refinance?
By converting? No, you won't have to refinance.
Okay, good. Don't leave it the way it is.
No, I mean, are you talking about just if you're just converting it? I don't know why they would. Did you guys have any idea? Awesome. I mean, the loan's the loan on the property, so.
Yeah, I don't think so.
Yeah. Again, these are some good ideas. Good ideas, Dave, and I would just be sure. Do you have a CPA to work with?
Well, since I got the house last year, for the first time, I did my taxes with a CPA last year. Very good point. Oh. But I just was pointing out the fact that in the newest tax thing, they talk about LLCs. I know this is a fact because, I've looked up on it. LLCs now can take 20% right off the top and not be taxed in the first 20%, right? So, I'm really going to look into it. I think it's an important thing, and I think it would affect probably thousands of people like me who work for a living but also rent out a house, Thank you for your time.
No, you're welcome. That's a great question. Hey, good luck. Call back and let us know how it goes. Yeah, that's a good question. And I'm sure we're probably going to get hundreds more. Not today necessarily, and you guys are going to get a bunch more, right? And some of these, obviously anything tax-related, but that brings up, I didn't think about that. So you're going to, a lot of these people with real estate now, or maybe many properties are going to think about, okay, should maybe I have these in a different holding? Should I be holding them differently? That's a good question. Mm-hmm. Are you guys prepared for all that?
I don't know. We're waiting to get the final tax bill passed through, and then we'll know what we're dealing with.
Yeah, no, that's the other problem is that there's still we don't know a lot of the final details of it. So as it comes out, obviously we'll try to pass that along as much as possible. Mm-hmm. Well, that was a good call. So let's talk a little bit about the market. We were talking off air that, we're in this run-up that's incredible. We're close to, 25,000 on the Dow, and it's been some kind of run, and most of us know if we've been around for a while, we experienced the .com, we experienced the mortgage meltdown, and there's these things that every once in a while comes around, and then now as we sit here today, I think a lot of people would kind of say, well, I'm not quite sure what's coming next or what the correction may be. So maybe just give us, if you can, your philosophy and your thoughts on the market where we are today, and then maybe moving into 2018, what we might expect.
Sure. So what we're still seeing actually from a financial standpoint, legs under this market.
Okay.
If you look back historically, we have been going on a bull run that's going on 9 years. So we are, it is kind of due from just a timing standpoint for a pullback. When we enter that is unknown. So that's what we don't know, is when and what the magnitude of it is going to be. One thing we have been seeing, though, is the U.S. markets are starting to just cross that average line of, from a Case-Shiller kind of index where you start to get overvalued a little bit. Stocks are actually still fairly valued. And the mistake people are making is they're looking at charts from just an arithmetic chart where it kind of goes from one point to another, and it looks like the chart is peaking or it's almost going vertical. What you have to do is look at a logarithmic chart, and then it paints a much different picture, which is we're still, the market still has a little bit of legs under it. Earnings still drive the stock market. Those are still doing well. We now have this corporate, boost that's going to, and people are still fairly confident. We're not seeing a lot of, detractors other than, hey, this stock market's been doing well, and it's been doing well for a while. Those aren't necessarily reasons to have a recession.
We have about 2 minutes before we're taking our next break. One of the things that I noticed, and I wanted to get your opinion on it too, is it used to be that any little thing that happened, the market was very jittery. We'd see more up and down, the volatility, I guess.
Sure.
And now we have this stuff going on in North Korea and some other stuff going on. It doesn't seem like it. Is it because we're so jaded where it's like, it'll be fine. Market's still going to be good. Corporate profits are good. The tax cuts. Right. Do we just, is it just me, or does it seem like the market used to be more jittery?
It did. And we do go, these are normal phases that we go through. But you have to remember, the market assimilates information in the same way it always has.
Yeah.
So the market isn't really going to tell you, what that just means is the market has already priced in a conflict with North Korea.
Right.
If it happens, that's not to say that we won't get a pullback immediately.
Yeah.
But what we do is we have these things, and we've had these risks pop up throughout history. It doesn't necessarily mean that the market's going to go down. You can point back to September 11th. The market went from the S&P, that is, went from about 950, 960 up after 9/11 happened, and then it went down, but it went down for other reasons.
Okay. All right, we're going to take another break. When we come back, we're going to continue our conversation. If you have any questions, I have the experts in the studios here. I'm putting them on the spot. If you have any questions, 1-800-516-1220. Do you have questions about investing? Do you have questions about the market, maybe what you should be doing? 1-800-516-1220. This is Joe Kuchera with Real Estate Radio Live. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Hi, this is Joe Kuchera of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you again for joining us this afternoon. Joe Kuchera with Real Estate Radio Live. We have in our studio guest today, Evor. He's the president of Aspire Planning. And also with us is Mira. She is the vice president and chief compliance officer. We're talking about investing, a little bit of taxes. We got a good call. And now we're going to talk a little more about maybe first the mortgage industry, guys. I think the latest one we were talking about, it looks like they're going to allow up to $750,000 mortgage on a primary residence to be able to get 100% of that interest tax deduction. Are you hearing or anticipating any concerns being in the Bay Area that we do happen to be one of the most high cost areas?
No, I think the past month what we've done is for a lot of clients that were contemplating doing a refi and they had first mortgages in excess of $750,000, we kind of stopped the process just to kind of see what was going to happen if the tax legislation was going to change at all, which it has, because we didn't want them to lose their grandfather status.
Okay.
So the latest thing we've heard is with the recent changes to the bill that it's bumped up from $500,000 to $750,000, and the grandfather date is December 15th, and hopefully that won't change as well. So anybody that has an existing mortgage prior to that date, they'll still be able to deduct the mortgage interest on the $1 million. Okay,
very good. Let's switch back to the markets a little bit. With the we were talking about the run-up we've had, you guys, and I know that there's there are people out there that would, you see it all the time. They plan the market, or they try to plan it to time it, I guess is what I'm saying, right? There's market timers. I guess, give me your philosophy, you guys, on that thought, that process, and then what should people be doing? And I'm guessing it's at certain age groups or volatility in terms of where they are in their investment strategies and exit plans and stuff. What they should be looking at right now when we've got a market like this, and if we did get a downturn to a certain extent, a correction.
Sure. So we base our investment philosophy on a kind of a passive-oriented philosophy. So we use a company called Dimensional Fund Advisors. We're similar to a Vanguard. They have a little bit of an active bent to them in that they don't adhere strictly to an index like Vanguard does.
Okay.
And we always want to control costs. So we do that a couple of ways. One, we're fee only. We don't take commissions, kickbacks. We don't sell high load funds. Number two, we really try and make sure that the portfolio is a low cost, it's index type portfolio. We always want to make sure it's balanced according to risks. So a client always tells us, and we do financial planning around what the risk tolerance is. But risk tolerance also comes in the form of how do you want to structure it for the stage of life that you're in. So you mentioned, the stage of life. Well, if you're a newly retired person, does it make sense to have all of everything in stocks? If you can achieve a return. Now, what we do also is we make sure that the family index, what they need to achieve, that is for their family and their goals to succeed.
I see.
It's not tied into an index that might be irrelevant to them, such as the NASDAQ or Dow or the S&P.
Okay.
What we want to make sure is what return does that client need to make in order to make all their financial goals work, regardless of what happens in the market.
Got it.
Whether it's up, down, or in good times or recession, it shouldn't matter.
Okay.
They shouldn't have to curtail their goals or their spending simply because the market is up or down. Because as we know, we can't predict when it's going to happen and what magnitude the decline is going to take. So,
You had mentioned something a minute ago before you started this about fee-based versus the loaded and, commissions and fees and stuff. Talk a little bit about that, if you will, because I think this is a bit that comes up usually on the educational process for consumers. How do I know when I'm buying this fund, what am I paying? I mean, most people would have to admit it's pretty confusing to try to figure out A, B, C, front load, rear load. I mean, you could go on, and it just confuses people, I think, in general. So how would one know, I guess first question, how would one know when they're in certain funds and what the costs of those are?
Right.
Is that something that's explained to them? That's the first question. And then secondly, if someone wasn't sure or there wasn't, if they wanted, like your opinion, you guys, to come in and sit down, hey, can you look at my investments and give me kind of an overview of what I'm doing and what your thoughts are? Sure. Maybe you could talk to both of those questions.
Okay, yeah. So we oftentimes have clients that come in with just that. They come in with a portfolio. The portfolio has a number of stocks or bonds, mutual funds, whatever it is in there. And we sit down with them and we identify where the costs are coming from. And most of the time what it is just high mutual fund fees or an advisor that is charging them well over 1%, something like that. And those are controllable. So the costs are directly related to the performance of the portfolio. I should say inversely related, because oftentimes what we see is the higher that the cost goes on a portfolio, the lower the return is overall in the long run. So what we really try and do is mitigate those costs where we can. That is one free lunch that we get by mitigating costs. You can increase the return pretty dramatically over the long run. And number two, where do you find the costs? Where are they hidden? Because I want to say to all the listeners, don't beat yourselves up if you don't know where to find this information.
Hard, huh?
Sure. I mean, the financial industry designed these things so that sometimes they're not very clear.
Okay.
Where do you find the information? Well, that's in a prospectus, statement of information, and they are very dry, numerically oriented kind of operating manuals for the fund. Really what you could do is you can go online and kind of see where it is. You can do Yahoo Finance. Morningstar has a very good tool that doesn't cost people anything. But what we do is we come in and we tell you not only what the cost of the fund is, but what's contained in the fund. So that's very important.
I see.
Yeah, because not all funds are created equal. Okay. You can get a small cap stock fund that has Google in it. Now, Google is not a small cap fund. It's
interesting.
It's a large, So you want to make sure that the fund is sticking to what its investment mantra is.
Yeah, the other thing I'd add too, even before all of that, one of the things when clients come in through our doors, we want to know what their risk tolerance is. What 2008 taught us was not all young people are aggressive and not all older people are conservative, and so we'd like to match what their risk tolerance is with what their asset allocation should be. So a lot of times clients will come through our door and they'll say, well, we'll figure out their risk tolerance and then look at their existing portfolio, and it's completely the opposite.
Right. Very good. So what about the investments in terms of domestically, international? Give us kind of your take on that, and what are you guys seeing, or do you see any trends? What are you advising right now in terms of the overall investment strategy when it comes to domestic versus international?
Sure. So we weight our portfolios equally almost in terms of we're domestic versus international. Not to say that we hold 50% stocks, 50% international, or U.S. stocks to international. We're usually tilted a little bit more heavily into the U.S. side.
Okay.
But what we have been seeing is a resurgence of foreign stocks. So there is still more room to run, that is, in the foreign countries, emerging markets, than we think maybe in the U.S. Now, that is to say, unemployment just reached a historic low in the U.K., a lot of the Eurozone companies their earnings are doing fantastic. The dollar is low. So we're seeing a lot of, indications that holding foreign stocks isn't a bad way to go. And if you're really nervous about the U.S., kind of shaving off a little bit of your profits from a U.S. Company or U.S. stocks and converting it back into the foreign markets, maybe not such a bad idea.
Got it. All right. 2018, do you guys see much of the same, flattenings, more acceleration, or hard to guess?
I'd say it's impossible to guess, but I would not be surprised at all if the market continued to go on a fairly decent run here. Maybe not to the extent that we've had. And some of these small cap stocks, the foreign emerging markets have gone up in the 30s. Generally, that doesn't happen from year to year.
Right.
But I would not be surprised at all to see it go on for another 12, 18 months, and then maybe then we have a pullback. I'm not out here to say that is a good guess or a bad guess one way or another. It's just we can kind of see there aren't really a lot of red flags out there saying this is going to really drop off a cliff as it did in 2008.
Yeah.
Right.
We got to take a break in about a minute, the last break. But I would think that, and we could catch this on the other side too, with the tax breaks we see, the corporate tax breaks we're hearing, in theory you would think that would create more opportunity, more growth, more jobs. In theory, right? Is that kind of what the overall consensus is?
It will help, I think. Overall, this tax bill will help. It is unpopular with the populace.
Yeah.
But I think, that it will help corporations. It's a tax benefit.
Yeah. Right.
It'll go down. Whether corporations, what they're realistically paying, is probably not what the maximum corporate rate is. But I think even though maybe they come down from a 28 effective tax rate, that is what they're paying, to a 21, 22%, that's going to be a benefit for sure.
All right, we're going to take our last break. We're going to come back. So this is your chance. If you have any questions, 1-800-516-1220. Investing, taxes, strategies, thoughts, concerns, 1-800-516-1220. This is Joe Kuchera with Real Estate Radio Live. We'll be back with you in just a couple minutes.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
The world is changing, and so is real estate. It's changing in ways that give consumers more control with more affordable options. So what are your options? Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air educating and informing consumers for over 7 years now. I'm excited to announce that there is now a more efficient and cost-effective way to buy and sell real estate. Our team at Real Estate Radio Live is launching a new program designed to help buyers or sellers like you in real estate, lending, and title. That's right, we'll coordinate the entire transaction for you. So you benefit by working with the same team, saving time and saving money. We'll guarantee you'll not only be working with the most qualified, hand-picked experts in real estate, lending, and title, but you will also save a significant amount of money in all three services as well. Act now and benefit from changing the world of real estate. Call 408-838-9060. Go to reradiolive.com. That's reradiolive.com.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit reradiolive.com. That's reradiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining us this afternoon as we wind down the show. Just about 7 minutes left. We have in studio today as our guest. Evor is kind enough to join us. He's the president, and then Mira is also the vice president, chief compliance officer, both with Aspire Planning. We've kind of talked about a lot of stuff today, haven't we? We've talked a little bit about the market, taxes, real estate, but we want to finish up with a little bit of real estate. But before we do that, if you guys, again, if someone's out there, they want to contact you, they want to learn a little bit more about you, your firm, how they could help, you could help one way, what's the best place to contact you?
I would go to the website, aspire-planning.com, and we are available all the time. Telephone 925-938-2023. Very
good. So real estate, again, just similar to the stock market. I was joking earlier during a break. I think that, everybody's genius is that bought houses, right? We all knew it. I knew this was going to happen. No, we didn't. None of us knew this. We're fortunate if we've owned real estate for a while. We're awfully fortunate. But along with that comes with some interesting consequences potentially for people. There's a lot of, I don't know what the number is, but there's a lot of people that hold real estate that have a lot of equity. In some cases, millions of dollars. And good problem in some cases, but then, what do I do? If I sell, boy, do I want to pay those huge tax. I mean, that is one hit on taxes, right? So if you have to, that's one idea. If I do sell, how could I offset taxes, or is just no getting around it? I know some people have talked about uniquely if you sell property and you invest into, what is it? I don't know if it's nonprofit or, I don't know, some interesting things to avoid taxes. I don't know. But I guess you guys probably hear this a lot, I'm guessing, with your clients, right? I'm guessing you have clients that they're sitting on real estate and they're just trying to figure out, what do I, and this is where you guys come in, the planning process.
Yeah, definitely. I mean, we come across clients that own sometimes more than just a primary home. They'll have investment properties as well, and the question tends to be, do we keep it or do we sell it? And it really depends on the client. I mean, I recently I have a client that owns several properties here in the Bay Area, and her primary objective is she wants to leave it to her kids. Well, if she wants to leave it to her kids, from an estate planning standpoint, it would make the most sense to pass it on to her beneficiaries when she passes away, because the kids get a step up in basis. And these homes she's owned for a long time, so property taxes are low, mortgage is paid off. So, not everybody's cut out to be a landlord, but there are management companies out there that could help them. And being able to rent out a home in the San Francisco Bay Area is not. I don't want to say it's not difficult, but there's a housing need.
There's demand.
There is demand for sure. And so we talk to clients a lot about, what is it that you want to do? What are your objectives, and what assets do we have, and what are some of the parameters they have to work within?
Yeah, I had a client just a couple of years ago I thought was really interesting, kind of cool. They have an own place here in Los Gatos, and it was worth almost $3 million. They owed very little on it, trying to decide kind of what they were going to do. And they said, they ended up talking to their financial planner, and we chatted to a little bit about some stuff. And the bottom line is, God, we've always wanted to live by the beach, and so they rented their place here for a year, and went and rented a really, really nice condominium right there on the beach. I don't know if it's Capitol, I forget, somewhere in Monterey. But the whole idea was, that was kind of cool. I mean, so they rented their house. They not only got a huge premium for rent, so they had enough money that paid for their condominium right there on the beach for the years, kind of how they decided. So that was I thought that was kind of a unique way to take a little break and decide maybe what you might want to do, right?
Yeah, and especially if they don't need to go back to that property, right? Renting it out makes a lot of sense. But, I mean, I have some clients that they want to still be able to access the property. But live somewhere else, so they utilize Airbnb.
Oh, yeah. Okay, interesting.
So if you can fund your goals by renting the property out, you can avoid taxes. You can get some tax write-offs.
Yeah.
Yeah, that's interesting on the real estate. So, is there anything? I guess we got to wait till the tax stuff comes out too. Someone was telling me, is there something in there about the 2 and 5 year thing with rentals? Is there something in there too about?
It's not for rentals because rentals are structured from a tax perspective, like an asset, like an investment asset.
Okay,
that's on residential real estate.
It's on residential. Okay,
yeah, and that was actually redacted. It was going to be. You have to live in the property 5 out of every 8 years. Okay. They got rid of that.
Oh, they did?
Was no longer on the table from what I've heard.
Okay, so it's back to the, what is it, 2 out of 5?
2 out of 5.
2 out of 5.
Right.
Okay.
Right.
So that was on the table, and that was
now it's off, so it's a little bit of a ping pong on that one. Yeah.
All right. So if overall, as a strategy, would you guys recommend that is it just each people, as we kind of close out today, I just want to make sure. It sounds like everybody said there has an individual profile. The only real way to figure out what's right for them is to come in, meet with someone like you guys, kind of figure out what the strategy is, build the plan around it, and then track it, I'm guessing, right?
Right, exactly. Especially when it comes to a huge asset like real estate, as you mentioned, millions of dollars. You really want to make sure that you know what you're doing. You have people that are working on your team and that have different areas of expertise, both from tax, financial planning, the investment, the retirement planning in terms of life. What are you going to do? Yeah. You really want to make sure you're kind of covering all that. It's worth the money, and you don't want to make mistakes when it comes to this.
All right. Unfortunately, we're out of time. Evor and Mira, thank you so much.
Thanks for having me.
Fun show. A lot of good information. We'll have you guys back a little later.
Oh, great.
All right, this is Joe Kuchera with Real Estate Radio Live. Thank you for those on Facebook following us today. Thank you for listening online. Thank you for listening on the radio. Be sure to download the podcast at reradiolive.com. If you need to reach me during the week, 408-838-9060. Have a great afternoon. We'll be back with you tomorrow. Take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Tune in, log in, download our podcast. Discover more at reradiolive.com. reradiolive.com.